Hello there. Kim Bolton is our guest on Market Call today. Kim, with Black Swan Dexteritas, is taking your questions on technology stocks. You know that number, 1-855-326-6266, or you can email us, marketcall@bnnbloomberg.ca. Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Technology, what do we got to bear in mind right now?
Well, we're in the middle of the earnings season, so all ears are listening. But on top of that, you have all these other fundamental technical signals coming in, which are pretty balanced. And I think that's why you're getting all this volatility. There's good reason for the bullish camp, and there's good reason for the bearish camp. And it depends who turns up at what time of the market.
Let's pull up a 5-year chart for the NASDAQ 100 as a proxy for tech sentiment. Of course, it soared in late 2021, it tanked, and it has made back a lot of the losses.
And yeah, but if you look at it, you know, the range, I think it was July 19th was the top.
This year.
Of this year.
Yeah.
And then it's sort of been in between that range now of about 1,300, 1,400 points, and you're down at the bottom right now.
Yes.
So you're testing right down around the 200-day moving average for the S&P. Certainly the Russell has gone through, and the NASDAQ's getting close.
Oh, and that's bearish if it goes below and stays below.
Yeah. So for us, we're pretty hedged, certainly through the funds. And if you do break, we'll put some hedges on the separately managed accounts. A
higher U.S. dollar, if the U.S. dollar keeps going up, and of course the American economy is oddly strong, surprisingly strong, that tends to be bad for tech companies. It cuts their overseas profits, I guess.
Definitely. But the reason for the dollar getting stronger is probably because of the fear of inflation and higher interest rates, which are certainly going to hurt the unprofitable technology companies and those that are more leveraged. And therefore, you know, because interest rates go up, and then they're going to have to pay more on their interest.
A plus for you could be the AI boom. Well, we've talked about that ad nauseum. Is there anything fresh on AI, though?
Absolutely.
Well, there's always something fresh, I know, I'm sorry. But any big movements in the past few weeks?
I would say yes, because, you know, if you look at the generative AI, you had to get the infrastructure in place. And that was getting in place over the last 10 years with the cloud, right? And so you have to get a place to put all the data. And AI would not work unless you got a lot of data. And so you got the infrastructure in place. Then you got the processors with the accelerators, but coming from NVIDIA. But then you have quite a few other semiconductor manufacturers and designers that are coming out with very, very competitive chips, accelerator chips, to challenge NVIDIA. Now, we think the next big move is actually going to come out of the software. So you get the data that's in the cloud, you get the processors to come in and actually massage the data. Now you get the interpreters of the data, which are the software as a service companies. You know, the ServiceNows, the Datadog, Zscaler. They'll all start to come into play. I think that will be the big move come 2024.
Software, because a lot of the buzz has been about the chips. Okay.
Right.
Okay, we're looking forward to it. Kim Bolton is taking your questions on technology stocks, 1-855-326-6266, or send an email to marketcall@bnnbloomberg.ca. We have an email from Judy. Judy is curious about Stingray Group. What does your guest think of Stingray? Can you remind me what they do, please, Kim?
Yep. So Stingray is a company out of Montreal, and they've been around quite a while. Sort of a niche market service company. a multi-platform music service for broadcasting and streaming, right? It's pretty illiquid. It's got a market cap of about $345 million, currently trading at $463. Well, the average analyst out there has a 12-month price target of $7. So it's got a very decent runway. Sort of on the good side of things, on the pro side, it's profitable. It also has a dividend yield of 6.6. Sort of on the con side, it's very geographic centric. You know, about 2/3 of its revenue is Canada based. You know, I'd say the key risks are Ray pays, you know, public performance royalties to performers and songwriters and publishers and so on. So the big risk is if the royalty rates were to increase. However, it is profitable. So for, you know, a smaller company, it's very, very well managed.
We haven't, so you'd be interested in it anyway.
Oh, we follow it. And, you know, I guess, you know, you could sort of layer in down here at around 460, 450, and then down at 430.
Elizabeth has sent us an email. Is asking about Akamai Technologies. It has done very well. Where would you sell it? So they provide a whole bunch of web services, cybersecurity, and I believe they're found throughout the internet. They have a very broad footprint.
Yeah, and they're an interesting company because they very much sort of service the edge computing. You know, for edge computing is all about devices that are away from sort of the data center, the servers, and it's sort of out on the edge, like our phones and so on, like that. But they set up their own servers and they get around sort of the latency, and they provide cloud services for securing, delivering, computing content, applications and software all over the internet and pretty well around the world. They also, because they're very much sort of skewed toward the edge computing side, they have their own cybersecurity side of things. So currently trading, I think it's around 104 and a bit. We own it. Have a 12-month price target of 109. So once it, you know, it did get up to about 107 a couple of days ago, but it's back down to 104. But I think you can probably get it up around 107, 109, and we'll be trimming up there.
Okay, so it's getting nearer to where you'd be inclined to sell.
Absolutely, and Elizabeth. Even at these levels, I'd take a little bit of money off the table because the runway's sort of short right now.
I see they just launched their latest scrubbing centers in Toronto and Montreal, and they are to do with getting rid of denial of service attacks. I think just cutting off malicious software. Yeah,
and they actually have got in. They bought a company recently, Lumen Technologies. That allows Akamai to sort of expand its content delivery offerings through Lumen's enterprise customers. So it just sort of builds up their addressable market.
Jeff is calling from Ottawa. Go ahead, Jeff.
Oh, hello, Kim. I'd welcome your views on Lightspeed Commerce. I don't currently own it, but I'm thinking about inching into it with some covered puts. Do you think that's a good strategy around this price point? Thanks.
Covered puts. Well, and if you're brave enough, I'd actually even maybe do some sell some negative puts. You know, if you're interested in actually picking up, so maybe you sell a put. I don't know, 5, 6, 7% out of the money because it's a pretty volatile stock. Just for sort of the rest of the viewers. They're sort of like a smaller Shopify, one-stop commerce platform for merchants, point of sale with their services as a platform. We don't own it. We actually do own it in a few of our separately managed accounts. Currently trading at around just over $18. The average analyst out there has a $24 12-month price target.
Okay, so it's not a big holding for you. What would get you more interested, do you think?
If they were a little more consistent with the reporting, and plus, they're unprofitable because they're still putting money to build market share and so on. And it's a very competitive space of payments and rate discounting. So, I don't know. We'd wait until they're profitable, and then they have a few consistent quarters to actually put it into the fund.
Sure.
Now, for separately managed accounts, those are more for trading, and so you could sort of pick it up here, own it here just over 18, buy down around 17 and a half, and then put some more in around 17.
Okay, thanks for that question. So we had Jeff in Ottawa. Let's get to Stouffville, Ontario. Bob is on the line. Go ahead, please.
Thank you for taking my call.
Pleasure.
I would like Kim's opinion on Google. Does he own it? Would he buy it? Or is it time to get out? Thank you.
Alphabet/Google.
And they just reported last night.
Yeah, that's right. And investors weren't impressed by the cloud results, apparently.
But you know what? They had terrific numbers. They beat on the top, beat on the bottom. They were like $4 billion shy on the cloud, and it got everyone excited. It's off 9%. This is a terrific place to actually own it, because it's in Google. What is it? 82% of their revenues come from advertising. So the cloud is sort of it's a real business unit, and it's done very, very well. And it's sort of the third horse in the race, just behind AWS and Azure from Microsoft, and then you got Google. I think this is just a great opportunity to get into it, and you can buy into it here, add to it. I don't know how much lower it would go, maybe down around 122.
But you think it's attractive right now?
It's very attractive. This is right now. Well, in our fund we have Google, Microsoft, all the big guys. So Microsoft reported yesterday. Also, they're up about 4.5% today. So that sort of covers the unrealized losses that we're seeing in Google.
Caller Kajin in Toronto. Go ahead, please.
Your guest view on Shopify, please. Thank you.
Thank you very much.
Thanks very much. Shopify, yes, we own it. And so currently trading right around $69, and the average analyst out there, together with us, has a 12-month price target of $84.60. I think this almost, it used to, if you go back over the last couple of years, people would sort of term Shopify as a speculative buy. But the way they manage the business, a lot more consistency in the business on the top and the bottom line. I think this is actually a long-term buy at this stage. Which is a big change because it's come a long way. So you could buy here at around 69, add in around 67. I don't think you'd see it, but maybe get it down around 61.
Okay, we'll be back with Kim Bolton of the Black Swan Dexteritas. The topic: technology stocks. The number to call: 1-855-326-6266. Tom is on the line from Mississauga, Ontario. Go ahead, Tom.
Hi there. Thanks for taking my question. I'd like your thoughts on Palantir Technologies. It's been quite a volatile stock, trading up to 20 and down back now at 16, all over the place this year. It seems to me their results have been improving quarter by quarter, and they've been making some good announcements on adding new customers and things like that. So I'm wondering if you think there's potential for this company as the markets overall improve, to get back up into the 20s, and what the analyst's average price target is. Thanks.
Tom, do you own it, or are you looking to buy it?
I own it, and I own it, but I own it in the low 20s.
Okay.
Okay. All right. Thank you, Tom. So remember, Tom, Palantir, they report on November 9th, I'm pretty sure.
I'll check that.
Because we're looking forward to that, because...
I'm showing November 2nd. Ken.
November 2nd?
Yeah, but
okay.
that's an estimate from Bloomberg, but carry on. Sorry.
Okay.
Yep. Okay.
So, on the plus side, they've had rising profit margins, great free cash flow, and they've made a lot of noise on the AI. So when they report at the beginning of November, that's what people are going to be focusing on, this AI platform of Palantir. Mm-hmm. We have an analyst actually in the Valley, in Silicon Valley, Yuri. He actually works for Alibaba, and runs their cybersecurity side. But he's an analyst of ours, and as Yuri always says, Palantir, if you're looking to get into AI in the Valley, that's the place to go. So they do attract the best client when it comes to the generative AI. And as I said, they've come out with this platform of AIP. Now, Tom, yes, they've got some new contracts, but about 2/3 of their revenue is centered in on about 20 clients, and about 27% of the revenue comes from their top 3 clients. So they do need to broaden things out a little bit here. We don't own it right now. We're going to be watching it very, very closely once the earnings come out, and we'll be buying on the dips. And you can expect quite a bit of volatility, Tom, around that. Now, so on the plus, rising margins, free cash flows, so on. On the negative side, even at this level, it looks even a little overvalued. The average analyst out there actually has a 12-month price target of $14.50, and here we are, right around 15, 16. They also have a bunch of class action lawsuits that are really have to do with a lot of those subservient SPACs that they were involved with before. So it's just sort of some questionable business deals that they had going on. But certainly the pluses outweigh the minuses.
Okay, and they're so deep into the U.S. defense and intelligence industry, yeah. Yeah,
they have two platforms. One is a Gotham, which is toward government contracts, and then the Foundry, which they're really building up, connects to enterprise data systems, and it's sort of out-of-the-box type of product.
And sure enough, they are reporting November 2nd.
Oh, okay, good.
Henry in Vaughan, Ontario, go ahead, please.
Well, thank you very much. I'm asking about Taiwan Semiconductor. When would you advise me to buy this stock? Thank you.
Thanks.
Thank you very much.
Stock up sharply in the past year.
Yeah. Okay, so Taiwan Semiconductor is sort of an agnostic foundry. So a lot of the designers, pretty well all the designers, end up going to Taiwan Semiconductor. And they have a pretty good moat around them. Other manufacturers like an Intel or ST Microelectronics sort of carves some out on the manufacturing side. But Taiwan is really the gorilla in that space of the foundries. And they keep building out their capacity of their foundries. They're setting ones up over here. They have a lot through Asia and certainly through China. So I think you can probably, we have a 12-month price target on Taiwan Semiconductor of $102.50. So it still has a decent runway. Now, semis are very, very cyclical, and they seem to be coming out of the trough. But it's more a matter of capacity and how fast they can actually produce this stuff to get it out the door. We own it. It's in our top 10. You have to watch it very carefully because it is a cyclical stock, so you can sort of trim it as it approaches price target.
Okay, we are going to take a quick break. We will have a look at Kim's past picks. We'll find out, for example, how he did with Netflix.
Making sense of business and the economy can be tough. We dig through the details to tell you what you need to know with straight talk and expert analysis so you can make informed decisions about your future.
Taking Stock, Fridays at 6 p.m. on BNN Bloomberg.
Kim was on our show November 16th of last year. Netflix was his first idea. And of course, this stock ahead, they have been increasing prices. And the CFO boasting, I have lots of other ways to increase margins.
Yeah. Everyone seems to be raising prices these days, right? Even Apple this morning, they moved their Apple TV service from $6.99 to $9.99.
Oh.
But yes. Netflix, and if you look at the graph, it's certainly been a bit of a ride, and it's been hard to stick with. However, we did stick with it. Currently trading around $413, and it's still got a decent runway left. We have a 12-month price target of $463. There's, like you were saying, Andy, there's so much going on. They're restructuring the whole Microsoft ad pack. They're looking at they're in preliminary discussions with Trade Desk and Comcast. It's amazing. Netflix, they have 238 million paid subscribers.
Whoa, quarter of a billion almost.
It's phenomenal. 190 countries. However, the big growth that's happening with Netflix is coming outside of North America. But one of the reasons that they beat, remember when they said this would be going back the end of last year, the beginning of this year, and the stock actually took a hit on it because they were upset about all the sharing of the passwords, right? And they said they were going to put an end to that. But it's interesting what happened. That actually paid off to their benefit because those ones that are shared actually came back and became subscribers. And that's how they actually, came in with about an additional 6 million more subscribers in the past. They just scooped up a Seattle-based gaming company, Spry Fox. So now Netflix has 70 mobile games out there. As you were saying, they reported they did extremely well out there. And they're increasing their plans by about $3 in the U.S. That now they're talking about similar steps over in the UK and in France. So yeah, I'd buy it even at this 412 level. I think you could see it down at 400. It wasn't there too long ago. And then the last third down at around 380.
Palo Alto Networks, a giant player in cybersecurity, a gain of almost 60% here.
Yeah. So I would sort of lump them in, Palo Alto, with the likes of Fortinet and CrowdStrike. However, they're a heck of a lot cheaper. And where they really, and I remember talking about this a year ago, everyone was talking about Fortinet and CrowdStrike. Not many people were talking about Palo Alto. But as you were coming out of the pandemic, a lot of those CrowdStrike and Fortinet customers were big enterprises. And with the big surge in cybersecurity services, Palo Alto was a great one to go to because they have packages that they can actually sell to sort of smaller and medium-sized companies. They cover it all when it comes to various other sort of cybersecurity side. So I'd buy it here, just around that 240 level, add it down at around 230, and then down at 220.
Okay, and then your final idea, another player in semis, ST Microelectronics.
Yeah. Now, this has been a bit disappointing. We didn't lose money on it, and we still own it. They've carved out, so it's a semi manufacturer and designer. So it's sort of like a smaller Intel, but their niche market is into particularly into the automotive side. But ST Microelectronics, their products are in Apple phones. They're their number one client. Number two client is Tesla. And that's for the automotive side. So one of the reasons Tesla migrates to them is because they use silicon carbide in their chip manufacturing side. So they last longer. They're more efficient. Don't use as much heat. And that was always a problem when it came to the Tesla side. So I still very, very much like this company. We have a 12-month price target of $55.50. I think it's currently trading right around that sort of 40 level right there.
Okay, we're going to be back with Kim Bolton. He's taking your questions on tech stocks, 1-855-326-6266. Andre in Chilliwack, BC. Go ahead, please.
Oh, good morning, Andrew. Thanks for the call.
Pleasure.
Thank you. Kim, could I get your comment, please, on Broadcom going forward? When is the VMware deal closing, and where do you see the company going in its future? Thanks, fellas. Have a good day.
Thank you.
Thanks, Andre. So Broadcom, first of all, they're in the semi side. They design, develop, and supply various semiconductor devices, with a focus more sort of on the complex digital and mixed signal devices out there. Currently trading 865-ish. It's got a long runway. The average analyst, and we tend to agree with them out there, has a 12-month price target of $997. So it's got a decent runway going ahead of it. Andre, you asked about VMware. We actually own both. A little bit more VMware. Now, the last one to sort of sign off on it are the Chinese. And they're sort of holding that hostage because of all the restrictions that Mr. Biden is putting on for the AI chips. But I think you'll probably see it come through. I think it does need to come through certainly by the end of the year. I think it's sometime in December. So, Andre, I'd own that, but I'd also own VMware.
Okay, but VMware is about to be taken over by them.
Yeah, but it's at a discount, so VMware has actually come off. But we're more of the thought that eventually the Chinese will give a thumbs up.
Come around. Okay. Larry in Niagara Falls, Ontario. Go ahead, Larry. Don't hear Larry. Amazon is the question.
Okay. So they report tonight, actually. I'm pretty sure they do.
I'll check. Okay.
Currently trading about 123. Off about 5% going into the earnings. These are two important days. So, the biggest market cap guys were the Microsoft and the Google. That was yesterday, and it was sort of a split between those. Amazon, big one. Then you've got Apple next week and NVIDIA later in November. So this is in our, Amazon is one of our top 5 across, pretty well across our separately managed accounts and certainly in the fund. And they just have so many horses in the race. We have 165 price target out there. And I would suggest, if you don't own it, I'd buy a little bit here. I think you can probably pick it up down around 118, and if you're lucky, down around 112. But it does report tonight, right?
I have it. I think it's tomorrow, actually.
Oh, is it tomorrow?
Yeah, Bloomberg says after tomorrow, although Bloomberg has a tentative, but the conference call, I know, is tomorrow. Is tomorrow at 5:30 p.m. ET. So I think it's tomorrow. But
you know, with all of these guys, the big, magnificent 7 that are reporting, it's all going to be about the AI, and how much they're spending will determine, what their prospects are. When Microsoft actually reported last night, I was blown away by the fact that in the third quarter they spent $11 billion just on AI.
On AI.
It's phenomenal, right? But there it shows you, they're spending the money because they can see the pot of gold at the end of the rainbow.
Yeah.
And but it's sort of a double-edged sword, because if you don't have the money, then how are you going to be able to keep up with them? So that's why, the big mega caps really have an advantage over sort of the smaller guys. But even the likes of, on the software side, Salesforce or ServiceNow, I think they'll do very well in the AI environment.
We have Daniel in Markham calling, please. Markham, Ontario. Go ahead.
Hi, Andy. Hi, Kim.
Hi.
May I have your thoughts on Topicus? At what price would you buy it, and your target price? Thanks for taking my call.
Okay.
Thanks, Daniel. Currently trading about, is it $87, $88? The average analyst out there, Daniel, has a 12-month price target of $125.75. So that's a significant runway going ahead.
Okay. Yeah. It started trading. We just have a 1-week chart. Sorry, Kim, for this one. But in any case, there it is, as you say, $87 or so. Yep.
I think the reason that it's cheaper is because, yes, it trades out of Vancouver, but its primary business is actually in Europe. And so the European markets sort of hold it back, and because of all the geopolitical events and so on going on over there. What else? So you can own it here. And if you own it here, I'd actually add to it, another third down at around 83 and a final third down around 79. I don't think you see it go under 79.
Okay, we're going to take a break. Kim Bolton is taking your questions on technology stocks. 1-855-326-6266. Glenn in Cambridge, Ontario. Go ahead, please.
Hi. Thanks for taking my
Pleasure.
call.
What's your question?
Can I get an opinion on Meta, please?
Thank you very much, Glenn.
Thanks, Glenn. I'm pretty sure they report tonight. And it'll be interesting to see how much money they sent. So it's currently trading right around that 305 level. And even though it's had a great run this year, it is, 305.23. We have a 12-month price target of 371 there, Glenn. When they report tonight, of course, it's going to be all about what they're doing. Yes, on the AI system side of thing, but it's also, they'll probably talk a lot about their meta content library. And let's see, the last time they reported, they beat by about 15 cents on the earnings and by about $2 billion. So I think they'll have to be able to do that again this time, considering how much it's sort of gone up so far this year. So Glenn, I'd own it around here. Still got a decent track record. But I wouldn't go all in, and I'd say add another third down around 290, and if possible, a final third down around 275.
We have Omar in Ajax, Ontario on the line. Omar, go ahead, please.
Thank you for taking my call. Just want to hear your thoughts on Nove, the software payment company. Thank you.
Thank you very much. Nove.
Thanks, Omar. So currently trading right around 19.5. We don't own it. I've had it in some of the separately managed accounts and was disappointed. You can see the drop and the problems that they had back in August. And they just, if anything, makes me mad when I see people like this. They should have come out prior to the last time that they reported and given a little bit more guidance to the people that own the stock out there. But, it's certainly cheaper down here, and you can, Omar, if you own it, you could buy it here, you could own it here. If you get a chance down around 18.5 and then possibly down around 16. They're in a very, very competitive field with the likes of Shopify and PayPal and all the other ones out there. So when they last reported, it was 51 cents, but the problem was the guidance that they actually came out with. So the top and bottom lines were okay, but it was the guidance that they really sort of cut back from. Now, some of the people out there are saying that the reason for the lower guidance was that they pushed some of the orders ahead. So this may be a good earnings time.
Okay. Chris is in Hamilton, Ontario. Fire ahead, Chris, please.
Afternoon, gentlemen. Thanks for taking my call.
Pleasure.
I'd like Kim's view on Salesforce. It seems to be very volatile, and would he be adding to it, and what does he see the prospects?
Thanks a million.
Okay. We still own it. And yes, it has some volatility. The management is super in this, but as I was mentioning before, this is one of the largest market cap when it comes to the software side, and as long as interest rates are steady or come down, inflation is steady and comes down, we think going into 2024, the likes of Salesforce or ServiceNow is really the place to be, because they are going to be the companies that are going to be interpreting and exploiting all the hardware that has gone into the infrastructure and the semiconductor side. And now they get to bring in the software guys, the likes of the Salesforce. They have that AI, which is Einstein. That's their software as a service for the artificial intelligence, and it's a phenomenal side. My wife works for California Closets, and although she cursed it in the beginning, once you get used to the Einstein, it's a tremendously powerful tool.
I guess that's sometimes the way with systems. Yeah. Until you learn them, they're horrible. Right. Oh, are we out of time? Okay. Yep. Don't go away, though. Kim Bolton will be sharing his top picks next. First idea, Oracle. And this fits with your thesis that the software people will benefit from AI in a big way.
Yep. Oracle's, it's both a hardware and a software, although it's sort of rotated more into the software a little later than people sort of wanted. But I just want to go back because I was looking the previous caller asking about Salesforce, and I'm sorry I didn't give you our price target. Our price target on that was 243, and I think it was sitting right around 200. So anyway, Back to the top picks, Oracle. So, this is one of the big guys. It's 280 billion market cap company, currently trading right around 101, and it has a decent runway going ahead. So we have a 12-month price target of $126. So Oracle, it's interesting when you're talking about the services and the hardware versus the software. So they have sort of three business units, which is the cloud and the licensing. So they're sort of the number 4 horse in the race in the cloud. But then they have sort of a lot of legacy hardware side, and then the services is very much where they've brought in, where they've come in with more products. One of which, it's really interesting, they just came out earlier this month with this Oracle NetSuite, which is integrated generative AI capabilities. It's powered by the Oracle Cloud infrastructure, but then this feature called the NetSuite Text Enhance enables users to create and refine contextual and personalized content by leveraging all the company-specific data in that Oracle Cloud infrastructure. I'll give you an example. So, for example, like in sales, it will help create contextual email responses by using that ERP, Enterprise Response Planning, and also CRM, Customer Relationship Management, and supply chain data. So they have the data. You go in, you ask the questions, almost like a chat GPT, but you access all of the data coming out of the infrastructure over at Oracle. So I would definitely, we own this. I'd own it here. If you get a chance to pick up another third down around 97, another third down around 91.
Lam Research is your next idea.
So this is on, this is again a semiconductor, but it's a semiconductor equipment company out of the US. So it is actually going to be a beneficiary of that CHIPS Act that came out, but it has it specializes in designing and manufacturing semiconductor processing equipment, essentially for integrated circuit fabrication. So currently trading right around $600. We have a 12-month price target of $680. Could talk a lot more about it. If anyone wants to talk more or hear about this, just give us a shout over at Black Swan. So I own it here. I think you probably may get a chance to buy it down around 570, and if you're lucky, down at 540.
And Atlassian is the last one. Team is the symbol. A software company?
Yeah. It's an interesting software company. It's so it very much caters to developers. So it's not like for everyday use and so on. But it provides solutions to enhance productivity, particularly for technical and business teams and developers out there. And the company sort of has 3 sort of business lines: project management, collaboration, and then software development life cycle tools that they talk about. Great total addressable market. They've come out with these Jira, J-I-R-A products. They just bought a company called Loom, which is a video messaging platform. So you can see how that could actually be used in a business setting. And it's, instead of actually using like a Zoom or Slack out there, you can actually get into Team and you get your own video messaging group. And so buy it here around 187, lucky if you get it down at 177, and then 167 for the final third.
I don't know, Kim. I don't want to be getting video messages, though. I mean, I want to read an email. I don't have to wait until somebody winds up with their video. Or maybe I'm missing the point.
Well, hey, look at TikTok.
Yeah.
Right?
Yeah.
And then another very cool video servicing out there, I don't know if you've ever used it, but Telegram. Telegram just came out with a very cool video messaging thing that actually comes, it's sort of like a porthole. So it's just very different. And actually the Telegram one has a 15-second life cycle in it.
Oh my God, and then it's gone.
And then it's gone.
Into the ether. Oh,
yeah.
Thank you very much, Kim.
All right, thanks, Andy.
I think we're out of time on Market Call. Remember, Brian Madden is up tomorrow. We love to hear from you. Market Call at bnnbloomberg.ca. Have a great day in the markets.